Alrighty, entire screen. Here we go. Good evening, everybody. So, just so you guys do know, you do have the ability to unmute yourself here, so you can like ask your questions when it's appropriate, or if like you just want to pause me real quick. Also, if you can just make comments in the chat, inside of the Zoom. Don't use the Discord; just use it inside of the Zoom, and I have that chat open. But tonight we're going to go over the day frame indicator I have. So if I've shared my indicators with you guys, um, I know some of you guys may not have been at the previous classes, so you might not have them. Just let me know if you don't. But if I've shared my indicators with you, you do have this on your screen already. And I'm just going to show you exactly what it is. So when I'm looking at, I'm just going to quickly. So this is like everything on my screen, like all of these indicators, but the day frame is going to be this right here, this blue line, this orange line. So you obviously have many different indicators with what I've shared, but I'm going to go over specifically the day frame indicator and what that is and how to use it. But I can actually just share just this indicator if you guys want to load it. What are you? That one. Not that one. Here it is. All right. So I'm going to share just this if you guys just want to load this specific study to save it. Come on. And I am dropping it. It has to be on Thinkorswim, yeah. I only have them all built on Thinkorswim. I have some built on Ninja. I think I have like almost all of them built on Ninja, and I guess I can. I'm working with Ninja right now. I actually missed a call with them today. I have to get them on Ninja, and once I do get them on Ninja, I have to go through like their compliance department. It's a pain in my ass, but once I get them on there, I'll give them to you guys on Ninja for those of you guys who use Ninja. But the day frame indicator is just these lines. That's all it is. There's three lines. There's a blue line, a green line, and an orange line. So I'll go back to my slideshow before I get too ahead of myself. So there's three lines, and I'll explain what they are. We have the upper mid. So that's going to be the orange line. And it's calculated by taking the midpoint to the current high. I'll go over this. Then you have the midpoint, which is the solid blue line in the middle of the chart. So if you want, just click that link and load it on your chart. And then you have the lower midpoint, and that's calculated by taking the mid to the current low. So it's a little easier if I visually explain this. So I'm going to go back to my charts. All right. So this is the midpoint. For the NASDAQ, the midpoint is actually here today. But so today, as in tomorrow's session, right? But today, as in Monday, the midpoint was down here. So this is the midpoint. And all the midpoint is it takes the entire range of yesterday, and your extended session has to be turned on. So if you're only looking at the regular trading hours from 9:30 New York to 4, you will not see this. You will only see this on your chart if you have the extended session turned on, just a note. But all it's doing is it's plotting the low. If we're taking the entire range of Friday, so if we took the low of Friday to the high of the regular trading hours, the 50% retracement would be here. So I refer to that as the midpoint. Okay. And then you also have the upper mid. Okay. The upper mid changes. The midpoint never moves during the day because it's a measure of the prior day. However, the upper mid can change, and you can see through here how it makes new highs throughout the time. What the upper mid is it's dividing the middle of the prior day to the high of the current day. So if I drew a 50% retracement from the midpoint to the high of the day, you get that upper mid. And as we make a new high, the upper mid moves up. As we make a new high, the upper mid moves up, etc. Does that make sense? Any questions with that? And feel free to ask them now. And if you want to jump on the mic.
Hey Jack,
Yeah.
quick question. How do we enable the extended session or the extended hours?
So I have it saved under my style, but if you don't have it saved under your style, you're gonna go to this bolt at chart settings and you click that chart settings, and then I believe just have to run through this really quick. Actually, I might just oh yeah, show highlight. I just have to figure out which one of these it's on.
It's under equities.
Okay, it's actually under equities and futures. So it's futures. It has show extended session right here. So any of these quick, if you want these settings like to be quickly accessed under style, you highlight these arrows and then you have to apply it. So I keep these all as like a quick setting for me, so I can just drop down to style and like you'll see me go throughout the day, like just flip these on and off like that. But that's how you do that. Okay, good question. So now we've opened up a new day, the NASDAQ, and it's actually going to be a great trading setup here. The NASDAQ's open. This is going to reset at 6 p.m. East Coast time. And when it resets, all it's doing, it's taking the low of the prior day, so Monday and Sunday overnight, and drawing it to high, and it's just auto plotting the mid. Okay. So that is also actually a level like I would feel comfortable limiting here in the overnight session. That's a setup for me. So then you have that midpoint, and then we have as well the upper mid. So we're taking the midpoint of the prior day. So the midpoint here to whatever the high is, and that gives us this upper mid. So we don't have a lower mid here, and we're not gonna, you only have an upper mid if you're above the mid. You only have a lower mid if you're below the mid. So like the last time we actually had a lower mid here, like we didn't have a lower mid trade all day today in the NASDAQ. We had a lower mid on Friday because we were below the mid. Now you can see on Thursday we had both. We started the day above the midpoint. We crossed down through it to the midpoint and then began making new lows. And as we make new lows, the midpoint, the lower mid plots in the study. Now, another thing you'll see on this study is this dashed red line as well as this dashed green line. And all those are, it's marking the high and low of the day. So as this dashed red line goes up, new highs are made and the upper mid trails. So this is just, I'm explaining how I've created this study so then you guys like can fully understand. And it's one of those things you might want to watch twice or rewatch this video later, but by explaining how I come up with the study, you'll also fully understand how I make use of it and why I find this study useful. Okay, so that is the calculations I have for the midpoint, the upper mid, and the lower mid. Okay, and so here's an example of the NASDAQ. You have mid, lower mid, and upper mid all in the same day. One of the best trending market type days is when you start below the mid and then cross above it and go the other way. Like if you are like bullish long term and we're below the mid, you get a halfway back in the morning. Great setup. We'll go over more of that later. But the midpoint theory, my theory behind this indicator is if the higher time frame is bullish, the best entries are going to be below the mid or the lower mid. So like right now in gold, if we we had a pullback on what was that, Friday? So gold actually pulled back on Friday, but gold on the higher time frame has been extremely bullish. So Sunday night, we were below the mid and the lower mid. This is something you're going to want to pay attention to in markets that are trending on the daily time frame. When they get that first day of pullback, basically what the market is saying is, hey, we're at the bottom of the range, and we're at the bottom of the range in an uptrend. So the longs below the lower mid or the longs below the mid are going to have more room to run. Does that make sense? And I'll switch over to gold in a bit, and then flip that on the other side of things. If the higher time frame is bearish, short entries above the mid or the upper mid are the best. So like right now, oil is, it's been downtrending. Like take a look at that daily chart. Even though like I've been fighting it, no lie, I was able to make some money on it today, but I have been fighting it. It's the upper mid. If we get a short setup in the upper mid, we haven't even had a higher time frame short setup in oil because we're just trending down so hard. But if we get above that upper mid and we roll over, that's the best position to enter short oil because it's been in a downtrend. So entering when we're on the upper side of its range is best. And then you have a case which we don't really have any examples, to really great examples of it, I would say right now. This is more something that's going to happen in lower volatility, slower markets where you have range bound markets in neutral biases and they just go back and forth up through the mid. Like we're just kind of trading the middle of the range. Or if you study volume profile analysis, we're trading through the middle of the volume profile where 70% of the volume is happening. So that's the theory I have to this. And then I have a couple of examples. This one in gold. Okay, there's two examples I have here in gold. So gold uptrend. Here is a day we crossed below the lower mid. This is ideally where you want to be looking to positioning yourself for longs because when the trend does turn, it can turn hard. And I'm going to go to this is a screenshot. I'm going to go to the actual chart of this. And this is really good for like swing trading for any of you guys who, I know there's many different styles of trading in here. We focus on like one style of trading, but of course, like you can do anything in the markets. Like you can trade a million different ways, but the best trading like for swings is when you get those pullbacks on the higher time frame. So this is actually the example of that right here this day. This is, if you want to go to it on your chart, it is October 10th in gold. And I'm actually going to go to a 20-day, 15-minute chart. Here we are. Okay. So we had a pullback on that was a Thursday. Okay. Thursday market closes. We put in a bottoming formation here. And then we go into Friday of not this previous week, but the week before that, where we were below the midpoint. So we have a market that one has been trending up on the higher time frame day after day. Like one of the most bullish commodities. We're below that midpoint. So our entry levels, when that market does turn, the assumption is in an uptrend, a higher time frame uptrend. When the trend does eventually turn back up, what is the market going to do? It's going to go back to all-time highs or back to highs of the chart. So when you're buying near the low or the mid or below the mid, you have so much room to run to the upside. So in this case, we had a beautiful halfway back long, and this is also something I'll look for. Now, these levels are just auto plotted. There's no manual work that needs to be done. This lower mid was also the halfway back from the prior day low. So I look at that as a double confirmation level. So when I'm drawing my Fibonacci sequence from the low of the prior day to whatever the most recent high is, I'm looking at that as a position. You can see how well we react to this. We actually go straight to target, retest, and then just market launch off. So if you're ever super biased a market and you're paying attention to it a few days, these setups they're gonna happen like once a week in an uptrending market or once week in a downtrending market, but they are going to be your best setups. And those are ones that are going to really run to target and give you that like 6x reward to risk ratio. Here's another example of that. So one thing you always want to keep in mind, like I'm trading for markets. I'm always aware of my higher time frame bias of those markets. Right now, my higher time frame bias of gold is bullish. So I am drooling at my mouth when I see gold come down below that lower mid. Now it doesn't, it obviously takes time for the market to set up in a perfect really entry, but we had this last night on Sunday, and this was a monster trade on Sunday. So this is a screenshot of Sunday's action, as in this Sunday. I'm going to flip over to my gold chart again. And what do? We have a higher time frame market. Friday, we get a nice big pullback. It was funny. I was seeing people on like Twitter calling for like a top in gold. Okay, you don't call for a top in a market when it's sold off one day off an all-time high. That's just stupid. Like that, you're top picking. You don't call for a top. You don't ever call for a top. Period. I mean, you can call for a setup short, but it's really silly to get in the habit of calling for a top. Anyway, we are opening Sunday night below the midpoint in a market that has consistently hit all-time highs day after day after day, like for the last month plus. We pull into a 50% retracement. This entry is below the lower mid. Okay. You're really putting the risk to reward ratio in your favor. These halfway backs, there was one at like 2 a.m. Most of us are sleeping. There was another one here at like 8 p.m. Maybe you don't check markets Sunday nights, but I definitely think they're worth it. If you got some free time, maybe you like football. I don't really care. Sometimes I watch it. Most of the time I don't. But I will check the market Sunday night. This move right here, we ran $15,000 a contract off of this. And your risk to the 61 would have been about $1,300. So that is a 10R trade in the same day, meaning your risk to reward ratio is 10 to 1, or 1,000% return on your risk. Those are the types of setups you're going to get in only this type of setup where you have a higher time frame bias, you're below that lower mid, and you're basically looking for you have a shorter shorter time frame pullback, a higher time frame bias, and then you looking for a shorter time frame entry long back into that higher time frame. And that's exactly what we had here. And then we blew out of those targets. And this was the extension. If you guys were in the trade room today, the long position I took was here. So this was one of my best trades of the day. I took 3 trades. This was the best one, and it was instantly in the direction. And also, one of the things I like to see is when we have a upper mid. So that upper mid, this orange line, it's never going to be perfect. Sometimes it is, but the extension I drew or the fib level I drew that gave me my support at the time, that support, my order was a 43.17.3, and that upper mid was like a point or two above it. So within a very small amount that was right above it. Okay. And then that went straight to targets, and now we're in a new extension here. Now, if we were to draw this same anchor new high here, that 38 is going to be right there. So this would be my next setup. We're getting a little off track with the topic of the day, but this would be ideally my next trade setup here at this 40. There'll be a level at 43.55s. I'm not going to trade these overnight because I like to sleep, but and then 43.43. So I will set an alert. And if we're at those levels in the morning, I'd take them. If you wanted to trade right now, you could be as aggressive as taking this extension to extension. You can see that's actually what's holding here. Okay. So moving back to my slideshow. All right. So higher time frame bias. Now, Current market with the higher time frame, bear bias is CL. Okay, it is. Even though I was trading it long today, and somebody actually asked me on it, they were pulled up their indicator that I taught, and they said it's negative 16. And I managed my position. I moved my stop up because I was counter trend trading that, which of course you can do, but the odds are always best if you're trading obviously in the direction of the trend. So we're going to go to CL and we're going to look for, we are above the mid. Okay. We are above the mid in a higher time down for trend. I mean, just simply look at this chart. Or just keep going down. Now, my ideal entry in CL is 58.29. My ideal entry is 58.29. I don't know if we're going to get that tomorrow, but I do think we'll get it this week. Okay. If you wanted to be more aggressive than that, man, I just, let's see. I don't have like, if we were to draw the halfway back from Wednesday's high to low, that would give us a 57.69. I'd really just like to see this thing expand sideways. But either way, if we start moving higher up to the, like you can even see today, this upper mid was getting rejected at the end of the day. It was also the profit target of a long. A profit target of a long. So it's safe to trade shorts. There's just no setup to sell short. You can't just short it because we're above it. But if we were to go up, let's say let's say we get up to the prior day's high, that would really be the first area of interest for me, which is 57.43. If we get up to 57.43 and see a fair value gap lower or a swing high get put into place, we can look for shorts, and I'll bring that up in the room tomorrow if that's the case. But right now, oil is a higher time frame bias bear, and it's just a matter of you got to find a level too. So another thing we could look at for a level is today we did hold longs out of lows. I like to fade targets, counter trend targets. So a counter trend target here in CL would be 57.47. There was a halfway back here in oil that traded at 11.45. That negative 61 is 57.47. And the prior high of the day is 57.43. If we get to 57.47, we will be at a target. If we get to 57.43, we will be at the prior high of the day. And we're also going to be above the midpoint. So what I will look for tomorrow, like with this whole midpoint theory, is I have a market, oil. My bias is short, but we're just not quite at my level. So when we get to my level, I will then place the trade. Okay. Any questions with that?
I got a question, Jack.
Yep.
Just for following along, trying to do this on my thinkers from charts. The link you sent, I loaded it like,
Here,
say I load Perry's grids, but um, is there are you using other indicators or something?
yeah, here, let me send you those because I know you weren't here last. I'll send you everything I got right here, and
Oh,
that'll
okay.
be
I'm
everything.
sorry. I
Yeah,
thought I
no, you're
loaded it
good.
wrong.
Nope, you're good.
Okay, cool.
And anyone who doesn't have that can load that, and that's like literally like all the indicators that I have. So that'll load up. That'll load up this, which is GC and CL, and that's the same indicators I use on the ESNQ. Okay, but does everybody understand like that setup for tomorrow? I'm coming up with a price. I have a bias, and then I just really want to price level the trade, and then ideally like confirm it with some price action when that happens. But until we get that, we might not even get that price level. It'd be nice if we did, but we might not. 1 second here. All right, we just gotta do something real quick. Okay. All right. Where is that slideshow? There we are. All right. So this isn't currently, but this was the other day. It was more of a neutral market bias, and this is the Nasdaq last week. Now, granted, extremely volatile neutral market bias, but this is what you're going to see. The market behavior of a neutral bias market is where we're trading that midpoint every day. Okay. And then one thing to pay attention to just for like higher time frame awareness is, are we closing above that midpoint or are we closing below? One of the things you'll notice last week is this is Monday, midpoint. What happens? It acts as support. Tuesday, we opened below it and we traded. This is one of those things, we traded right to it. This is that day we nailed this low on Tuesday, if you were in the room, and we just traded straight up to it. Okay. And then what did we do at the end of the day? We went straight back to it. See how that works? It kind of acts as like a gravity point. Then on Wednesday, we were aggressively bid above it. And then as soon as the market started fading, what did it do? It dropped straight to that upper mid, bounced. As soon as it crashed that upper mid, it went straight to the mid. This is something you'll notice once you plot it on your screen, that like these levels they just act as natural supports and resistance. Thursday, we gap up. One of the trades I look for is when we are above the upper mid and we roll over, I target the upper mid. So if we're like this part in the Nasdaq, we were like 200 points above the upper mid. Unless we're in full breakout mode, 200 points above the upper mid is like not going to hold. As soon as that trend cracks, straight to the mid, 200 points down. The next day, we're above the upper mid. We're above the upper mid by over 100 points. As soon as that trend cracks, straight to that upper mid. As soon as we don't hold that, straight to the mid. Okay, we even go through. The next day, we're below that lower mid. We rally. We open off the open. Where do we go? We go straight to the midpoint of the prior day. We hit that midpoint. We go straight back down to what are we at right here? The lower mid. So this indicator really, me and Perry made it kind of like on accident, but it's like, we're like, wow, what did we just create? This thing's a beast. And it's a really good way. And that's why we call it the day frame, because it kind of frames the day. Another thing you want to be aware of, I'm always cautious for longs above the upper mid. If you're buying longs above the upper mid, you're basically buying the market in the top percentile of the day. You're chasing. And if you're selling, like I hate selling below the lower mid. You need one hell of a bearish market to sell below the lower mid. You need one hell of a bearish market to sell below the lower mid. It's just not. You're much better off waiting for that trend to turn. So like today, you guys will notice I didn't take any longs in the indexes. There just wasn't a setup for me. And like in the overnight session, sure, there was pullbacks, but as soon as we opened, it was just a rip fest. Like super high, super tight, minimal pullbacks. It was a breakout day. And in breakout days, it's hard for me to like get long. It just is. So I just typically observe. So I didn't take a single trade today. Now, ideally, I have a perfect setup for tomorrow. And this is textbook. I'll give it to you guys right now. And if it trades, be ready to take it. But on Friday, we had this beautiful halfway back long. We finished the day at the negative 61. This is kind of where we're basing up here. This now becomes the next setup. We're going to take this high here from 10 o'clock and we're using our fib tool. And for those of you guys who haven't dived into fibs, don't worry, you'll learn it, but just pay attention to the levels now. That's what's most important. The 1015 high drawn to what is the current high, that 38% retracement here in the NASDAQ is where we want to enter, or if we can get the 50. The 50 is literally perfect, so it probably won't trade. But this is a level that's 50%. You'd probably want to front run it, meaning place your order ahead of the actual level. So if the level's 21,157, you would want to place your order at 21,000. I would say 21,062 because I think that's so perfect. It will be front run. It's the middle of the prior day and it's the 50% of the extension. So there will be a series of buyers there tomorrow. I guarantee it. It's just a matter if we can get down there. So what typically needs to happen is there needs to be a distribution up here, a bunch of sideways movements, trap some traders, and then ring them out. And then ring them out for just 30 minutes and then rip it right back in their face. But we'll be sitting here prepared for these levels. And the same setup exists in the ES. Let me see if let me just type the ES in here. We're going to use the high here. It's it's 1015. This high to high, 6750 and 6740. So I'm going to set an alert here just in case I somehow forget. If it trades and I'm not in it, I'm sleeping. That's really the answer. If it trades and I'm not in it, I'm sleeping. Okay, at or below. Ding. Cool. Back to this. So observations of market types. Bullish market types are going to trade above the mid for the majority of the day, and they will close above it. So I always pay attention to like take a look, go back. You got this indicator, study it, run it back a few days. Look at the market behavior of gold, uptrending market. Look at the market behavior of the indexes today. So the indexes last week were back and forth between the mid, but mostly above. But we were still in a high volatility market, but closing above and reverting back above. So today was that first day we really took off from that midpoint. We're range expanding upwards. So that's going to be a pattern behavior of bullish market type. So another thing to add, like, hey, like you want to be buying setups, trading long markets that are trading above their midpoint consistently over the course of a few days because the path of least resistance is higher. Bearish market types are going to trade below the mid for the majority of the day as well as close below it. Pull up the mid indicator I just gave you guys. Take a look at CL. What's it doing? It's below it. It's staying below it. It's not spending a whole lot of time above it. And then, like I said, neutral markets are going to trade that mid every day. So by observing the behavior and just every single day of like where we are relative to the prior day's midpoint, you're going to be aware of higher time frame trend biases. And those higher time frame trend biases you should carry into the next day with your trading decisions. Okay, so we're gonna we're carrying in our trading decisions every single day. Tomorrow I'm carrying in today's action. We're using technical analysis into the future, right? That's the whole point. All right, so that is really like all I have for like midpoints here today. Is anybody confused or want to hammer me with some questions or setups, feel free to go ahead, jump on the mic with any of that stuff. If not, I'm going to move to like order management. Okay. Well, all right. Cool. Order management, ATR stops. So some of you guys may already have this. So another indicator that I've shared with you guys already that I have yet to explain is this ATR indicator. So one of the famous sayings, like, and you'll if you listen to like a trading podcast or read a book on psychology or talk to a professional trader, they'll always say, "Take what the market gives you. Don't be greedy." Or the old famous saying, "Bulls make money, bears make money, pigs get slaughtered." Jim Cramer loves that one. What does the market give you? What does that even mean? Okay, like how do you quantify what the market's giving you? And I quantify what the market's giving me by using the average true range. Okay. And if we go to this here, this one I just shared, this yellow box at the top is an ATR code. Is an ATR code. I'm actually going to reload this real quick. This code is a little glitchy for some reason on the display. So there's two things to be aware of with this code. The first thing is this is where what I'm using to kind of determine like my stop size. So this factor number, it's taking the last 10 bars of whatever time frame you're looking at. So if I'm looking at a 5-minute in gold, it's taking the last 10 5-minute bars and giving me the average. And then I'm asking this indicator to multiply that number by 1.5. So if the average is 10, it's going to spit out the 15. And my theory is that's about if you're trading a 5-minute chart and your stop size is 1.5 times the average move every 5 minutes, that's a reasonable stop size to have. Now, if you're trading a 5-minute chart and the ATRs are 15 points and your stop size is 5 points, what do you think that's going to do? If the average true range is 15 points, and you guys can answer this in the Zoom, if the average size is 15 points every 5 minutes, and you're either buying or selling with a 5-point stop, what do you think is going to happen? Stopped out. You're going to get stopped out every single time. Or if you don't get stopped out, you're just getting lucky. You're stacking the odds against you. Now, different market types require different stop sizes. And of course, with different stop sizes, your risk is either going to increase and decrease. The only thing you can do is then change your position size. Because you want to keep your unit size or your risk, your bet size, uniformly the same as much as you can. It'll never be perfect. You're never going to be able to risk the exact amount because they're standardized futures contracts. Like with stocks, you can basically risk to say the exact amount, but with futures, you're not always going to be able to be down to the exact dollar. It's going to be a couple dollars off, but you can get pretty darn close. And if you're trading the hourly chart, like every hour, and once again, these numbers are multiplied by 1.5, but our I call it what is the ATR? What is the ATR? You'll hear me see that. The ATR on the hourly in gold is 34 points. That's $3,400 a contract, and that's printed right here. So this is really helpful for managing risk. So if I have GC at the top right, it's going to tell me what the average range is, and then per contract, what that move is in a monetary number. So 3480 in GC. But if I type in MGC, so the micro, it also calculates the micro, $350. $350. Right now, gold is the most volatile contract from a monetary standpoint as far as how big the swings are. Okay, so on an hour, the hourly ATR and the GC, $3,400. So if you were trading the 1 hour contract or you were trading the 1 hour chart, Will, that's the appropriate size you would want to be using. I use the 5 minute, so I don't use this big of a stop. I won't use a stop bigger than 20 points in gold. But like if you were swing trading this, you should definitely be expecting to use that big of a stop. And if you don't want to you risk $3,400 a trade, which that's a decent amount of risk per trade, then you just drop it down to the micro. But like normally the Nasdaq is like before this breakout in gold, the Nasdaq was almost always the most volatile like market to trade as far as like a monetary risk you'd have to take. It's half of gold right now. $1,600, literally less than half, which is crazy. So this code is going to do two things. One, it's going to plot the average true range. That's the appropriate stop you should be using on a 5-minute chart. So when you're trading a 5-minute chart, you need to be using this. And if you're not comfortable with the amount of risk it's asking you to take, then wait till we vol contract. And you can wait till we vol contract. Like there's sometimes like during COVID or whatever, like I've seen markets that get so crazy. I'm like, well, I can't trade this. We're moving 1,000 points. I've seen 1,000-point candle in the Nasdaq. What do I do? I'm like, people are like, oh, the market moved crazy. I'm like, well, yeah, we're moving 1,000 points in 5 minutes. Like, I don't know how to trade that. Like, it's not worth it. It's not worth you. We're not here to like be the hero on days like that. That's the type of day you go to your stock portfolio and buy in it because it doesn't matter because you're holding it for a year. You don't sit and trade futures contracts when we're moving $1,000 a point. It's just like it's how you get blown out. You don't want to get blown out. Now, the other thing this code does is it also prints, and I'll get more into this analysis and another thing, but these yellow bars you see on my screen, I refer to them as ATR bars. When we move more than 1.5 times the average, these bars print yellow. So they're almost always going to be yellow at the open because obviously we go from an overnight session to a market open session where more traders are at their desk and order flow increases. But you'll see these during the day. They're increases in speed and momentum. They're momentum bars. Because if the average is 10 points and then all of a sudden we move 20, this bar is turning yellow. If the average is 6 points and all of a sudden we move 12, this bar is turning yellow. And so you'll see the yellow bars that are printed on my screen. What each one of them is signifying is that that we've just increased range. And that could be two things. It can be the beginning of a bigger move or it can be exhaustion. It's just all relative to the context. Okay, so that is something I use for two things. One, to just be aware of market momentum. Two, to be aware of an appropriate stop size I should be using. And then three, be aware of what I should be taking from the market. If I'm in a trade and within 25 minutes, you'll hear me oftentimes say, I'm gonna set a timer for 25 minutes. And at the end of the 25 minutes, we're not doing anything. But like we've gone a little bit your way. Sometimes I'm making the decision to just take it off at an ATR. Like right now, the ATR here in the NASDAQ is 16 points. If I'm in a trade and after 25 minutes, it's not looking great, but I'm up a little bit. I'll just say, you know what, I'm just going to take 16 points and I'll wait for the next setup. Just like book that little gain. Book that little gain in a slower market. Like if you were trading at any point in time here, like literally past, this would have been a great example. If when you're trading here past 10 o'clock, let's say you were buying like little extensions in here, we're not really doing anything. And you're sitting there twiddling your thumbs. The market's like here. If you bought this, the market's going sideways. The ATR at that point in time was probably 25 points. Take 25 points. Take 25 points. Because we're just not, when you're vol contracting, not everything needs to be a home run. Not everything needs to be a home run. So it's just kind of like a gauge for that. Moving back to the slideshow. So what is the market giving you? What is the holding time frame of your trade? Like that's how you set your expectations. When I'm trading, like I don't really hold trades a long time. I'm a day trader. We're day trading. You can trade and sometimes I do like swing trade, but I'm in and out. I'm making those decisions, and this is how I'm making those decisions. I'm using statistics of previous information to gauge my expectations moving forward. Like you can't just move if we're moving 10 points and your target is 100. Is there a news event coming out? Like, where are you getting this number? Like, why do you think you're going to get a 100-point move? You're just wasting your time. Okay. So another thing I pay attention to is this 5-bar time cycle. So when I get in a trade, I have a kitchen timer, a cheap Amazon kitchen timer, and I hit it like that. It literally is set for 25 minutes. I get in a trade, I take my cheap little $4 Amazon kitchen timer, and I set a timer, and it just sits on my desk like you were cooking a cookie, and I watch it. And at the end of 25 minutes, that timer goes off. And my theory that I have is that if I'm measuring the average true range of the 5-minute bars, and I enter a trade and I set a timer for 25 minutes. So if in 25 minutes, which is 5 times the amount of time I'm measuring, right? We're not moving. I'm giving the market an opportunity. The market should be moving at least an ATR your way in 25 minutes. If it's not, you're either stopped out or we're just vol contracting. So I'll show you like this trade I took here. Both the trades I took today were like right away. It was right away. So I had this move here in gold that I took today. Let me draw up what my analysis was at the time. So I literally bought here at 955. And when I bought, you'll see me sometimes I'll take my vertical line tool, which if you center click on your mouse, I drop down to this. It's called a time level. And I will go, if I entered at 955, I will drag it out to 1020 and I'll draw that line. And literally I got long here. And 25 minutes later, we were at the anticipated resistance and I got out. 25 minutes. My timer went off. We were at an old negative 61. Now we continued higher and that's fine. But at 25 minutes post entry of my trade, this is the decision series I'm running through. 1, am I taking profit? If I'm not taking profit, I'm moving my stop up. Okay. Or if I'm not doing either, then in the market's contracting, then I'm saying if the market's contracting, we've gone nowhere for 25 minutes. Is this a trade I still want to be in? I'll answer Rob's question and then Will, you can jump on. So when you are in the trade, the expectation is to hit the negative 61. I wouldn't say the expectation is to hit the negative 61. My expectation, my general rule of thumb when I buy a fib is like the target is the negative 23. Now, we only hit the negative 61 under certain circumstances, but I very rarely am like sitting up there with my target at the negative 61. The only way I would set my target at, this is how you set your target for the negative 61. You get in the trade. So here's your buy. This was my buy today right here. Got long. I set a timer for 25 minutes. At 25 minutes, I'm making the decision. Am I moving my stop up or am I taking the target? Okay. So let's say I have the negative, I have the negative 23 above. I have the negative 61 above. So let's say here, timer's up. Jack, time to make a decision. I'm going to go out another 25 minutes. So that's 10:20. So we're going to go plus 25. So that's 10:45. We're going to mark it here. And I'm just going to move my stop up to break even. Or let's say I'm going to trail the 61 of the next long. I move my stop up. And then at 25 minutes, we're still up. We're still cruising. Time to make a new decision. Move your stop up below that swing low. We break out. We get all the way up here. 25 minutes later, right here. 25 minutes later is right here. Okay, make another decision. What do you want to do? Do you want to take that? Do you want to take that target, or you want to move that stop up? So the only way to hit that negative 61 is you gotta analyze it your way through it, because you don't want to run a trade all the way up here only to have it come back. So the way to hit a negative 61 is to move up and then you're trailing the stop. But I don't know, I can't think of an example. If I am, I'm just being greedy, or there's a news event where I'm expecting, if there's an upcoming news event where the volatility is going to increase and it's a binary event, like you're going into a PMI number, a CPI number, you've bought the halfway back and it's going to be 100-point candle either direction. So it doesn't really matter. Throw your target up high. Sure. But that's a unique scenario. Will, go ahead and ask.
All right. So my question was about the confluence on the entry with the ATR candle. It was the first yellow candle, correct?
This one right here.
Yes.
Yeah, so as far as like the confluence, so that was like a fib level I had bought. It also was this upper mid within, a few points, and this breakout here. And there was a couple levels. We actually broke this 61, but I was just my thought process on that entry was one, the just general higher time frame bias long. And then there was also a different fib that I was drawing from this 4:35 a.m. to high, which also held. There's going to be two series, always like, multiple series of buyers. This more aggressive move actually got front run on its first test. And then so as we came down through the second, some of those stops got hit, which led to it actually dipping lower. It was about a 10-point drop from my entry
Right. Right.
before it turned around, but it was so quick. And also at the time, I mean, the average true range was just about that. But yeah.
And did that ATR candle give you that confluence? Like you're looking for that as like an entry if you see a yellow candle, or is that
So
just more of a
if I
confluence?
see a yellow candle that's counter trend, I need to see this thing flip.
Okay,
This was more confirmation here.
understood.
So because like when we're ATRing down, it's two things realistically. It's either you're really right or you're really wrong. And I know that's like a very broad statement to make, but what that means when you're expanding lower here, like stops you're getting hit. Obviously, sellers are increasing with speed, but to immediately turn around after that, like I knew it was more. This candle right here was more important than this candle. And the other thing is, like with confluence, once that order is placed and that limit is made, the only thing I can really do is let the market trade and know what I should be risking.
Okay, thank you.
Because once you've made the decision to enter a trade, like it's not like when I saw that yellow candle, to be honest, down, I was like, like I like that can be a little shaky, but I also knew there was a couple of levels there, and then I saw this volume, but there's confluence and confirmation. I didn't necessarily look here and see this as confluence, like this first ATR candle. You could, it is, I just wasn't at the time looking at that. So that would have been, you could consider that confluence because it's the beginning of a move. It's the beginning of a range expansion, technically. So yeah, you could look at that as confluence, but really more importantly was the confirmation, and the confirmation came from this high volume candle here. And I never really measured volume in numbers. Like I don't know how much volume this is. You can just see it's relative to the other because I'm overlapping the volume on the backside. But the immediate candle, I call this an ATR reversal, which is when we have an expansionary move down that's reversed within what I call one time cycle, which is 25 minutes. So if we ATR expand down here at 9:55 and are back above that by 10:10, that is an ATR failure. So a failure to continue lower, a liquidation of weaker longs, or over leveraging of shorts that's immediately rejected and taken the other way. This is a beautiful candle to see after your entry. If you ever get long and then immediately see a range expansion in the direction of where you place a trade, you can begin trading against that, meaning moving your stop up below that low, because realistically it should not retest. Cool. Alrighty. So yeah, 5-bar time cycle. Everybody go buy yourself a kitchen timer. If not, borrow one from your wife if you got one. If she doesn't get one, get her one for Christmas. She'll appreciate that. Let her know it was your my idea. Okay, and then the last thing I'm going to go over here is bracket orders for everyone who doesn't already have them placed. Now, what you'll notice when I place trades, sometimes if I don't have a bracket order on my screen, it's on accident. To tell you the truth, so when I enter a trade, I am entering all of my trades with OCO orders, and so an OCO order stands for order cancels order, or order cancels other, depending on who you ask. And so I'm gonna load up this is why I asked everyone to open up a Tradeovate account. I'm gonna bring over like a demo account here, and we're just gonna go over. We're gonna place it in gold because gold's the easiest. So if you go here, type in GC. Does anyone here not have bracket orders set up? So this is that's the wrong button. I need to roll this forward. What gold contract are we in? Here, this must be in the Z. All right, so in Tradeovate and Tradeovate and Ninja are very similar. You basically have to go to the settings button, and I'm gonna go through one of these, and then you guys can repeat it on other ones. But for gold, I always name my bracket orders by how many ticks are in them. So there's 10 ticks to a point. So here we're gonna make a 15-point gold bracket order. So I'm gonna hit this plus button here, and I'm gonna say 150T, which stands for ticks, dash 150T. So I just know what the order size is. Click OK. And then this stop and take profit, 150. And once again, I will get you a recording of this video if I'm going too fast. You'll be able to go through this stuff. And then what I do is I want to save this. Okay. And then when I'm placing an order, I'm using a bracket. So if I buy an order, I'm going to just place this order here. All right, come on, fill me. There we go. All right, so my order is filled. My risk is automatically set. Okay, so 15 points above, so I'm long 43.85 half. That means my target's 15 points higher at 4,400 half, and my stop is 15 points lower at 43.70 half. Okay. Rob, I can help you with that. Just DM me in your room. The toss is a little different. I mean, you can trade on toss, but the reason I don't recommend trading on Thinkorswim is because the margins are really high. That's going to require more capital to trade the same product. Yeah, so Ninja works, and also this is some stuff that you can honestly, how to place a bracket order. You could probably look up a video on YouTube how to place a bracket order. So if you have, I know a lot of people have different order management or executionary tools. I'm obviously not going to go through all of them because that's just a waste of time, but I just wanted to show you guys that this is important. TradeStation, I've never used TradeStation's order bracket. TradeStation I think is good for trading futures. I've never used it though for trading futures. I trade stocks on it a long time ago. So you would have to look that up. But TradeStation is useful. It's just Thinkorswim requires overnight margin for intraday margin. There's no margin breaks. So the NASDAQ on most futures brokers, they'll require a 2K margin or a $200 margin on it's a $200 margin on the micro on Tradeovate or Ninja. And if you were to trade the micro in Thinkorswim, it's 2,000. So it's fine if you have the capital freed up to do that. It's just going to require more. That's all. And if you're okay with that, that's fine. If you're okay with that, that's fine. It's just going to require more capital because they charge full margin. They do not give you intraday margin. for safety reasons. It's not a bad thing. Most traders would completely blow their accounts given intraday margin, and they just don't want you blowing their account because they'd rather have you rack up commission, which is a good thing. If you can't trade, that's not a good thing. So what you can do, these are the standard bracket orders that I have, and feel free to take a picture of this. And then you just need to really go through every market and create different bracket orders. Now the micros are 1/10 the size, but this is now remember 15 points here, and the ES is actually 60 ticks because there's 4 ticks in a point. So let me, I can't type that out. I thought I could type that out. Can't type that out. So I use these are my standard bracket orders, especially right now in this high vol. Sometimes in a low vol, I'll move the NASDAQ to 30 points. That's not happening right now because we're high vol. But these are, when I'm placing orders, these are my order sizes from top to bottom. So just take a picture of this and then just go through and make sure when you're trading, you have to have automatic stops in, and then you can move them. You can move them. You see me moving them, but like I'll move my stop up. I try not to move my stop down. I'm not gonna say I don't do it because there's not many things I've never done because I've done everything when it comes to trading, mistakes included. And you probably will too. Just avoid them the majority of the time, and you'll be all right. But this, by just automatically having a stop in as a rule of thumb, you're going to avoid fat finger mistakes and really bad decisions. Okay, so just take a picture of this, and then you'll just have to go through. And then tomorrow, like in the room, if you guys are in there, feel free to ask me, and I can show you how to set them up, or like point you to a video or find a video for you. But yeah, so just to go, I'll go back how to do that on Trade Station again, or not Trade Station. What was that broker I said? Trade. So you just like whatever you type in ES, we'll go ES, pull up the contract. You go to this little button here. We're going to do 15 points in the ES, which is 60. So we'll 60T dash 60T, 60 ticks, 60 ticks. We're going to go 60, 60. Boom. We're going to save it. You contract, and there's going to be a target. Oh shit. I messed up. I got to turn the bracket on. Got to turn it on. Okay, turn it on. You got your target 15 points higher and your target 15 points lower. Therefore, and these are also what's called server side orders. Brokers back in the day used to be not server side, they'd be customer side. So if your computer decided to restart in the middle of the night or go to sleep on you, the order wouldn't work, which really wasn't a good thing. That happened to me many times. I'd wake up and the orders wouldn't cancel the other. But yep, that's going to conclude. If you guys have any more immediate questions, please let me know. Otherwise, we can do some follow-ups and stuff later, but that's everything I've covered here tonight. I will catch you guys on Thursday, and I'll get this recording up for you guys tomorrow so you can rewatch it. We all good? Any more questions before we go? Cool. Everyone have a great night, and take care.